And Philip, I asked myself a very, very important question. In fact, the answer to this question will help fix any problem that anybody's got going on in their life. I don't care if it's financial, real estate, career, relationships, it doesn't matter. And by the way, these people running around saying, oh, every problem's an opportunity. I want to throw up. I didn't have an opportunity. I had a problem. Let's face the facts. Now, the problem did become an opportunity over time. If it hadn't been for this problem, you and I wouldn't be here together today on your show talking about private money. So here's the question that I asked myself after being cut off from the bank. I said to myself, I said, Jay, I said, who? You see, it's not what or how, it's who. Mm-hmm. I said, who do you know, Jay? Who do I know that could help me fix my problem?
If you're a real estate investor and are wondering how to raise and leverage private money to make more profit on every deal, then you're in the right place. On Raising Private Money, we'll speak with new and seasoned investors to dissect their deals and extract the best tips and strategies to help you get the money, because the money comes first. Now here's your host, Jay Conner.
Welcome to another episode of the Lightspeed Investing Podcast. I've got Jay Conner, a real estate investor who's very seasoned and been around the block, but his most interesting thing is his journey that got him involved with private money. So he's got a lot of wisdom, and I'm excited to have him on to share his journey with us and to teach us some things about real estate. How are you doing, Jay?
Philip, I'm doing fantastic, and thank you so much for inviting me to come along and talk about my most favorite subject that I'm so passionate about, and that's private money, getting your real estate deals funded with private money. You know, the reason I'm so excited about it, Philip, is because this one strategy, this one technique of funding my real estate deals with private money's had more of an impact on our real estate investing business ever since we started in 2003.
I love it. That's why I'm excited to have you on and dive into it. But before we do, right, there was a specific moment in your life where certain frustrations boiled up when you were interacting with your own bankers, right? And that's kind of what led you to look into private money a bit further. You want to share that journey a little bit and share with the audience what happened exactly, to cause you to be so motivated?
Sure. Well, I just didn't wake up one morning and say, hey, I think I'll go raise me some private money for my real estate deals. When everything's going along smoothly and you're on the top of the mountain, sometimes you just don't look for other solutions or, ways to do business. But growth takes place down in the valley where things are not going so well. So we started investing, my wife, Carol Joy, and I started investing in single family houses all the way back in 2003 here in Eastern North Carolina. Our total target market is only 40,000 people. And we do 2 to 3 deals a month. Average profits are 86,000. I don't share that to brag. I share that to make a point. And that is, there's a case to be made to be a dominating force in a small market. I'd rather be a big fish in a small pond. So we started investing in single family houses way back in 2003. And Philip, from 2003 until January of 2009, those first 6 years, the only thing I knew to do to get my deals funded was go to the local bank or the mortgage company, get on my hands and knees and say, please fund my deal, and fill out applications. And, the banker would make me pull up my skirt and show all my personal assets and pull my credit score, and I had to provide financial statements. Well, that plan for funding my real estate deals, that worked out okay, so to speak, for those first 6 years. But then everything changed in January of 2009. And here's what happened. Philip, I was sitting right here at my desk, and I had 2 houses under contract to get funded. And I thought I still had a line of credit with the local bank. And so I called up my banker. His name was Steve. I told him about these 2 deals that I had on a contract that needed funding. And I learned like that over the telephone that my line of credit had been closed with no notice to me whatsoever. And I said to Steve, my banker, I said, Steve, what in the world are you doing telling me my line of credit is closed? I've been on time with my payments for 6 years. You funded a ton of deals. I got a great credit score. Why are you closing my line of credit? And Steve said, Jay, don't you know there's a global financial crisis going on right now? And I said, no, but you just gave me a financial crisis. I don't have a way to fund these two deals, right? And Steve says, sorry, not loaning money out to real estate investors. So I hung the phone down on the receiver and I sat here for a moment. And Philip, I asked myself a very, very important question. In fact, the answer to this question will help fix any problem that anybody's got going on in their life. I don't care if it's financial, real estate, career, relationships, it doesn't matter. And by the way, these people running around saying, oh, every problem's an opportunity. I want to throw up. I didn't have an opportunity. I had a problem. Let's face the facts. Now, the problem did become an opportunity over time. If it hadn't been for this problem, you and I wouldn't be here together today on your show talking about private money. So here's the question that I asked myself after being cut off from the bank. I said to myself, I said, Jay, I said, who? You see, it's not what or how, it's who. Mm-hmm. I said, who do you know, Jay? Who do I know that could help me fix my problem? And interestingly enough, when I asked myself that question, you know, the power's in asking the right questions. You can't get the right answers without the right questions. I immediately thought of Jeff Blankenship. Well, who in the world is Jeff Blankenship? Well, Jeff's a dear friend of mine and Carol Joy's. We know him through a cappella singing groups and gospel events and church and all that. He was living in Greensboro, North Carolina at the time, and he was investing in single family houses. So I called up Jeff. I told him what had just happened and my conversation that I had with my banker. Jeff said, well, Jay, welcome to the club. I said, I'm not sure I want to be a member of that club, but what club are you talking about? He said, well, that's the club of being shut off from your bank and your bank shutting you down. He said, my bank shutting me down and stopped loaning me money on my real estate deals last week. I said, well, Jeff, how are you going to fund your real estate deals? He said, well, have you ever heard of private money? I said, no. He said, have you ever heard of self-directed IRA companies and how individuals can take their current retirement funds that they're not happy with and transfer them over to a self-directed IRA company with no tax penalty, and then they can loan that money out to us real estate investors, and the interest we pay them is tax deferred or tax free to them? I said, Jeff, you're talking Greek to me. I don't have a clue what you're talking about. I said, what's private money? He said, well, there's this gentleman down in Jacksonville, Florida, by the name of Ron LeGrand. I said, who's Ron LeGrand? He said, well, I don't know much about him, but, you know, he says he can teach us about private money. I said, well, what is it? Jeff said, Jay, I don't know, but Ron says we can get a lot of it really, really fast. So I went to my very first real estate investing conference 6 years after being in this business. Don't make that mistake if you're listening to this show. And I went to learn about private money. Oh boy, did I learn about private money. I came back home to my hometown here, and I was able to raise $2,150,000 in new funding, new private money funding that I didn't have before being cut off from the bank. So I actually had more funding available than before, when the bank cut me off. And you know what's interesting, Philip? I've yet to ask anybody for money. No chasing, no begging, no selling, no persuading, because this world of private money, getting funding from just ordinary people, I call this lazy money. This is not looking for rich people or sophisticated, accredited investors. This is getting money, funding from just regular, ordinary people using their investment capital or their retirement funds. So I've got 47 private lenders right now funding our deals. And you know what's interesting? Not one of those private lenders ever heard of private money or private lending until I put on my teacher hat. Right. My teacher hat says private money teacher. So I just went about in my own social circle, my connections, people I go to church with, and I started talking with them and exposing them to this world of opportunity of private money that they had never heard about. And in less than 90 days, over $2 million was pledged wanting to invest in my deals in a way that they had never heard about it. And since that time, Philip, I've never missed out on a deal for not having the funding.
I love it. I love it. Now let's get some clarity here, right? You said the real estate investing that you mainly do are single family residential homes, right?
That's right.
So what is the modality at which you invest? Are you putting money down so that you can rehab and fix them, right? And enhance the value of the home? What is the strategy here? And that makes it so robust, because obviously for people to trust you with their private money, you have to have a pretty good offer, right? That shows them here is the path to getting your money back and some more.
That's right. Well, and that's a great question, and it's a multifaceted answer. So first of all, I'm paying them 8%. I've been paying my private lenders 8% ever since February of 2009. So all these people, they're used to just getting, 1%, 2%, 3% or whatever in the local bank in a certificate of deposit. 8% is a whole lot more money. So right off the bat, they're interested because of the interest rate that's being offered.
And this is on an annual basis, the 8%?
APR, yes, annual percentage rate, yeah. But then secondly, you see, is how we secure and protect the private lender is very important. So we're not borrowing unsecured funds. This is all asset-backed debt. So I'm not raising money for a fund, right? To where I'd have to have an SEC attorney and a private placement memorandum. This is all called asset-backed debt, which means every private lender has their own promissory note, and that promissory note is collateralized or secured by a deed of trust. Here in North Carolina, most people call it a mortgage. So that protects them in case I don't pay them. If I don't pay them, they get the property. Now, another thing that they get all excited about is that it's a very secure and safe investment, because I'm not going to borrow more than 75% of the after repaired value. Now, I didn't say 75% of the purchase price. They fund the entire purchase, and the private lender funds the entire rehab, the renovation up front. That's why I bring home a big check every time I buy without having to take any of my own money to the closing table. So then we renovate the property, and then we cash it out. We sell it, right? Now, we can sell it more than one way. We can put it in the multiple listing service. We do high-end renovations. They look like beautiful homes, and they sell quickly in the multiple listing service. Or if I'm just doing a light rehab and it doesn't need that much to it, I can also sell it creatively to a rent-to-own buyer or a lease purchase buyer, which means they can't go to the local bank and get a mortgage. And the reason that works today is because 8% APR is less than what the commercial rates are at the local bank. Right now in today's market, the average commercial rate for a 30-year fixed mortgage on a commercial piece of property, say if you're going to landlord it, is 8.3%. So 8% is even less than that. I can get a positive cash flow, rent out the home, help the buyer get ready for a mortgage, and then they get a mortgage and cash me and the private lender out. So we have multiple exit strategies.
Gotcha. I love it. I love it. Now, in terms of your typical time frame at which you are holding on to these properties, right? Because it sounds like you do the rehab route, but it depends on how much renovation we're talking about. So I'm kind of curious, once you get into a property, right, what is that time frame before you turn it around?
Sure. So if I'm putting it in the multiple listing service to sell it, and I've done an absolutely beautiful transformation of that home, from start to cash out is going to average 9 months. And here's why it even takes that long. Because I've got so many projects going simultaneously, I might have a house sit there for 90 days after I purchase it before one of my contractors even gets there to do the renovation. And then a $50,000 or $60,000 renovation might take 90 days. So now we're 6 months into it. And then we stage it. We get professional photography and drone footage and all that. So maybe another 30 days goes by. Then we list it with a realtor. And if it gets under contract quickly, then it might take another 45 days to cash out. So
Yeah.
from start to finish, 9 months on a full rehab. On selling to a lease purchase or rent to own buyer, then that's going to average somewhere around 18 months because it's going to take us anywhere from 6 months to 12 months to repair their credit to where they could get ready for the mortgage.
Gotcha. Understood. Now, when you get these private lenders coming in to help you secure the deal on these houses, how do you categorize them so that when you take that capital, right, are you allocating all of that capital onto one property, or is it similar to like a fund structure where you're like, I got two investors going in on this one house, right, so that you make sure that the finances don't get commingled?
Yeah, that's a great question. So I can have more than one private lender secured by the same property, but let's say I've got, for easy figuring, to follow the math, let's say I got a $200,000 after repaired value house. I'm not going to borrow more than $150,000, right? That's the after repaired value. Let's say I buy it for $100,000 because it's distressed, right? So I might get one private lender to fund $100,000 for the purchase. I might get another private lender to fund $50,000 for the renovation. So now we have what's called total loan to value. We got $100,000 from one private lender, $50,000 in second position from another private lender. They each have their own promissory note. They each have their own mortgage secured by that same property.
Gotcha. It would probably be commensurate to that ratio, right? One would have, double of the other person because they put up double the money.
I'm not quite sure I followed double.
Well, the guy in the first position, he put up $100K, right? The guy in the second position, he covered $50K for the renovations. So the guy in the first position put up double, right?
Correct.
The second guy. So does that mean that he would get double, right, in terms of the ROI? That's my question.
Okay, well, the one in first position is going to get 8%. The one in second position is going to get 10% APR because it's a little bit higher risk in second position than in first position, right? So if both of them were getting 8%, then yes, the one in first position would make twice the amount of money.
Gotcha. And is this way of operating mainly in North Carolina, right? You said?
Yeah, I'm in North Carolina.
So you mentioned at the very beginning, right, to be a big fish in a small pond so you can dominate the market.
That's
Are
right.
you mainly, since 2003, mainly dominating the North Carolina market? Or where is your specific focus?
No. I'm dominating 2 counties, which is only 100,000 people, right? So I'm dominating only a populated area of 100,000 people, and that's why we're able to do 2 to 3 deals a month consistently that are very, very high profit deals.
Oh, okay, great. So tell me about your vision, right? Because you're still doing this, but it seems to me like you've got a lot of masterminds going on. So in terms of your continued endeavors within real estate, right? What are your next projects?
Well, my vision is to impact and help as many other real estate investors as possible be in control of their own destiny by being in control of their own funding and not succumbing to the rules of institutional money. And here's what I mean by that. Most people walking around, 99.9% or more people walking around, have this belief that whoever's loaning the money is the underwriter, that whoever loans the money sets the terms, that whoever loans the money makes the rules. And me and all the thousands of people that I've trained this to across the nation, we've turned the tables on that stinking thinking. So instead of applying for a mortgage, we're offering an opportunity, right? We don't pitch deals. We don't try to sell deals. What we do is we lead with a servant's heart, and we expose this opportunity to people in our own networks, how they can make money, high rates of return safely and securely in a way they never heard about it. And then once they're all excited about it, then we come back to them with a deal and deals for them to fund. We don't have to pitch the deals because we don't bring any deals that don't fit the criteria of what we already taught them as far as what they're going to be funding. So there's no pitching of deals. All we're doing is delivering on our promise of putting their investment capital and or their retirement funds to work in a better way than what they were getting.
Oh, okay. I think I'm starting to get a better understanding of how you position yourself differently, because you're not really pitching the individual on anything related to the deal at all. You're just saying, hey, if you're willing to put up X amount, I can get you 8% or better on an annual basis.
Yeah. We just teach them the opportunity first. It's like, here's the private lending opportunity that you could be a private lender for higher rates of return safely and securely than what you are currently getting. Here's the interest rate we pay. Here is the length of the note. Here's the frequency of payments, and you get to choose that because every private lender's got different cash flow objectives. Here's the maximum amount that we're going to borrow. Here's how we're going to protect you. Here's how you can get your money back early in case you have an emergency. We give them a 90-day call option if they want to get their money back early. And so first is just the offering of the opportunity. You see, one mistake that new capital makers raise when they're looking to raise private money is one mistake they make is talking about the opportunity and then pitching a deal and talking about a deal in the same initial conversation. Here's a writer downer. Desperation has a smell to it. The worst time in the world to be raising money for your deals is when you need it for a deal. But no, the money comes first. You get the money lined up first, then you come back right away and fulfill your obligation of putting their money to work for them. We call it the good news phone call. And maybe in the next episode that I'm here on there with you, I can give you the script in your audience for the good news phone call. We get our deals funded 100% of the time with this one little script. But the reason it works is because how we have structured and how we've set up this relationship. We've taught the private lender, I mean, they didn't even know about anything about private money until we told them about it. And so now they're ready to go. They're waiting for a deal to fund. Then we deliver the deal for them to fund, and everybody's happy.
So in this way of private lending, do they know much about the money and where it's going? Like, do they know that it's going to real estate investments?
Oh, sure. Yeah, they know it's going to.
But they don't really know. But it's not like a broker dealer. Like, they don't know all the nuances of that real estate deal, right? You're just mainly presenting to them what they get as an ROI, how they can call their money back, like how their private money, it can be secured. And that's, I think, the pivot. Is that correct?
Yeah. So on the first deal they fund, they're going to know what the after repaired value is. They're going to know, obviously, what's the funding required for the deal. They're going to know the closing date. They're going to know where to send the money, right? But they don't get into what did I buy it for. They don't get into how much the rehab is.
Yeah,
they don't care.
Yeah. No, it's not. They don't really dive into the real estate nuances of it. They're more. This is more like, hey, if you lend me this money, I'm gonna give it back to you and some more. Here's how it works, and this is my track record.
Yeah, it's simple. Yeah, and look, on the second one and the third one and the fourth one and the fifth one, all they want to know is how much money do you need and when do you need it?
Right. Because in a way, this is a blueprint that's applicable to assets in general, as long as you know what you're doing to those assets to get a hefty ROI. Is that correct? Like, it doesn't even have to be real estate. The concept is, if I'm correct, right? You're presenting to them an opportunity within private lending, private money. You're educating them on how they can get an ROI, and the asset at which you're investing in is actually secondary to the conversation, because it doesn't, like in my case, it wouldn't be real estate. It would be the markets, right? And it would be, hey, we know what we're doing within the markets, and we can, if you're willing to take this on, right, this is how you can get your money back. And that's the focus.
Yes. Yeah. See, I'm glad you brought that up, Philip, because another mistake new capital makers raise is they talk too much, right? Like a confused mind takes no action whatsoever. So the key is to simple that anybody can understand.
That's why when a salesperson talks to me, I'm confused all the time.
Right?
That's right. That's right. But look, Jay, this has been very educational. Thank you so much for introducing me to the concept of private money. In this short 20 minutes, I've certainly learned a lot, and I'm looking forward to learn some more in our next get together. Now, for the audience listening, right? Number one, you have had some immersion within not just real estate, right, but entrepreneurship. What is your best advice, right, if you were talking to your 18-year-old self, or maybe some pitfalls to avoid, right, to conclude the episode for the audience?
Surround yourself with like-minded people that have already been successful doing what you want to do. Don't make the mistake I did. When I started out this, in my first 6 years, I was out here on an island by myself, just relying on my previous experience and success in a totally different industry. So what would I tell my 18-year-old self, or actually in the case of 2003, what would I tell my 30 or my 43-year-old self at the time is go get in a mastermind, go get a mentor, go get around people that are already successful doing, I don't care what it is, that you want to do.
Yep. I love it. I love it. That's why I love studying success principles, because regardless of the industry, it's applicable, right? As long as, and you know, when you study them enough, recurring themes keep happening. Thank you so much for your time, Jay. For the audience listening in, if they want to get in touch with you directly, what is the best way?
The best way to get in contact with me directly is let me give your audience a gift. And so the gift is my recent best-selling book, which is called Where to Get the Money Now for Your Real Estate Deals, How and Where to Get Money for Your Real Estate Deals Without Relying on Traditional Lenders. And the book is $20 at Amazon, but don't go to Amazon and spend $20. Let me give you the book for free. I'll autograph it for you. I'll ship it to you 3-day express and just cover shipping. And you can pick up my book at jayconner.com/book. Again, that's jayconner.com/book. I'll rush it right out to you.
Thank you so much, Jay, for the generous gift. I really appreciate your time today, and I look forward to seeing you again.
God bless you, Philip. Thank you.
Thank you. You take care now.
Are you feeling inspired by the knowledge you gained in this episode? Then head over to jayconner.com/moneyguide. That's jayconner.com/moneyguide and download your free guide that shares 7 reasons why private money will skyrocket your real estate investing business right now. Again, that's jayconner.com/moneyguide to get your free guide. We'll see you next time on Raising Private Money with Jay